I was always told that entrepreneurship was less about skill and more about mentality, meaning it's not as much about being great about a specific thing as it is about understanding how to monetize anything that you're good at. My journey into coaching started with a daily blog sharing how bad I was at trading, and I was able to turn that into a successful business which has worked with hundreds of thousands of traders across the world and was even recognized in Forbes magazine. So if I can do it, why can't you do the same? So start growing your business today by starting a podcast using Spotify for podcasters. I love them because they allow me to record, distribute, monetize, all from a single platform with just a click of a few buttons. I can also record video episodes and interact with you guys, my fans, by posting Q&A and poll questions. Best of all, it's free, which is massive since most businesses require significant startup costs to get going. So the way I see it, there's no risk or reward to at least giving it a try. So get started today at www.spotify.com/podcasters or download the Spotify for Podcasters app. And as the great Shia LaBeouf once said, just do it. A lot of traders are closed-minded, and there's a reason for that. We'll get to that in the podcast. But what I want to share with you today is a story of how something that I swore I would never use actually became a very important piece in my trading, and how I wouldn't have discovered that if it weren't for being open-minded and having a growth mindset. So check it out. Now, again, the interesting thing is this, and for you guys that are new, I never planned on using this tool. It was, man, I don't know how many years now. Time goes too quick. It had to be, 2 years ago. So I'll give you the full story. For the longest time, I was highly against volume in Forex trading. Now, this is the cool thing about growth mindset, and this is why I think I'm a big believer in growth mindset. I used to be very stubborn as a trader, but I also think as a newer trader, you have to be very stubborn, because if you've ever been out there on the internet, everyone and their mom is telling you that you're wrong. Everyone and your mom is telling you that, hey, Brendan, you can't trade successfully doing this. Hey, Adrian, that pattern doesn't work. Hey, Adam, you can't use this. And we start believing that stuff because we're newer traders, we're highly impressionable. It's the same thing as like when you're a kid and someone tells you something as a kid and you believe it. Again, I thought for the longest time that the sky was blue because it reflected the water. My dad told me that when I was little. Like all this stuff that like you just like you have no reason not to believe it. So growth mindset is key, because I think we need to get to a point where eventually we get smart enough where we go off and we do our own journey of discovery, and then we come back and we form our own opinion on whatever the subject may be. And the cool thing is that our own opinion ends up being stronger, whether we've changed our opinion on something or whether we've just given ourselves more proof that our opinion was always right. It's stronger because now we've actually done the work ourselves versus someone telling you. It's the same concept as like backtesting, where it's always like, hey, well, if someone else's backtested results proved positive, then why do I need to backtest myself? Well, it's like, well, if Adam just took Chris's backtesting results, how much does Adam actually trust Chris? Adam, do you trust Chris? Do you trust Chris that he did a thorough enough job and sees the market the same way that you did to just blindly follow his backtesting results? What if Chris cheated? What if Chris did like 1 month and was like, I'm just going to plug in some random numbers, right? You may believe it a little bit. You're like, Chris seems to be a good dude. But do you really know Chris, right? So in the back of your mind, there's always going to be this kind of question like, especially when things start going bad, right? No one ever questions it when things are good. When things are good, like, oh, Chris is the best. Love you, Chris. I'm going to buy him something nice, right? But when things start going bad, you start wondering like, right? We don't have 100% belief. And if there's anything less than 100% belief, there's going to be cracks. And just like a dam, right? Small cracks under pressure create bigger cracks and bigger cracks and bigger cracks, and boom, they explode. So that journey is super important because it allows us to come back stronger or more educated. It's a win-win situation. Either we learn something that we're wrong about, and learning something is always good, or we have more conviction in the thing that we were right about the whole time and more belief, which is always good. right? So I always believe in growth mindset and the journey of discovery and trading and life in general is key. So with volume, I always knew it was relevant in the stock market. I come from a stock market background, so I know it was relevant in the stock market because there's a true central market in the stock market. We know exactly how many there's an exact amount of shares that are available. So we know all the participants that are participating in the stock market, right? Because there's a central exchange. So a number actually means something in the stock market. The thing about Forex is that there is no central exchange, right? We're all getting data from different data providers. So the volume that I get from my data provider only represents the volume that is being traded through my data provider, but not being traded through another data provider or another data provider or another data provider. So is it really a true number? Does the volume that I see really represent the exchanges that are happening in the market? Like, no, it doesn't. And that always bothered me. I remember having a conversation with Mike Bellafiore about this, where he was looking into the same thing. He's like, hey, we got some people on the desk that are trading Forex, and we do a lot with volume at S&B Capital. He's like, how do you deal with it in the Forex market? And I'm like, I felt bad because I'm like, I look up to Mike Bellafiore. I'm a fanboy when it comes to him. And I'm like, I haven't found a way to use it, man. He respected my honesty, but it was like, this is my chance to be like super Forex trader dude. I'm like, well, here's how we do it in Forex, Mike. And I was like, I haven't figured out a way. So I never really trusted your traditional volume. So I went on a kind of this journey of self-discovery that I told you guys about. It had to be 2 years ago now, where I started hearing different things about volume, and I just wanted to be sure before I dug my feet in on the whole argument that volume is pointless. Even though I had made it before, right? But I wasn't fully dug in. And I studied it, and then I actually tracked it for a year. Many of you guys are with me. I spent an entire year tracking it, entire year using this indicator as well. And out of it, I found that volume could play a role, that we don't have to necessarily, we can understand that the volume that we get, I'm talking about the specific number, the volume that we get in the market, it's okay if it doesn't actually represent the literal volume in trading. Because at this point in Forex, there's only so many data providers. It's not like it was a million years ago where it's like everyone and their mom and dad had a brokerage or a data provider. There's only a certain amount. And in many cases, if you're using a major data provider, you can safely assume that the activity through your data provider is probably replicated through other data providers. So although it's not an exact number, you can't trade during an exact number. I would take that number with a grain of salt, but in general, what's happening in point A is probably very similar to what's happening in point B, because data isn't all too different across the board, right? So that got me back in understanding, like, hey, I don't have to be literal and use a number like I would in like the stock market, but I can use more of a comparison of volume versus looking at numbers. Now, I ran into some other problems as well. The problem with volume trading in Forex, another problem is that Forex is a 24-hour market. So there's going to be a natural ebbs and flows in volume. We all know that there's three main periods of sessions of trading. There is the London session, the US session, the Asia session, right? We also know that the two biggest periods of trading are going to be the London session and the US session. And that within those periods of trading, the biggest one is going to be the overlap between London and New York, because that's when the two biggest parties are trading. So think like it starts off with London, good amount of activity. Then US joins the party and the party gets popping, right? Everyone's enjoying themselves. And then London leaves early because, you guys close up and the party's still a good party, but it starts to die down a little bit. And then when New York closes, right, it dies down completely for a little bit. Asian session starts and it's like, it's a cocktail hour or something like that, right? So you're going to have a natural ebb and flow in your volume, where every single day, and you look at it on your chart, you bring up a daily chart, you'll see it, or a 4-hour chart, you'll see it. Every day you're going to see volume, you're going to see higher volume spikes at certain periods. It's cyclical, right? But that's if we're making a comparison between volume, meaning high versus low, it makes our job very difficult because it's hard to decipher, hey, is this volume high because there's actually some type of different activity in the market, or is it high because it's the New York-London crossover? So aside from a daily chart where you don't have those ebbs and flows because it's one day, or a lower time frame where you're strictly focused on a set session, so you can make those comparisons between the hours or minutes in that session. If you're someone like me who's mainly a swing trader, 4-hour hourly, it's very difficult for me to get a good read on volume. So although I understood it, I never found a use for it. And then on accident, I found this volume profile tool, which it was talked about in the book by Anna Cooling. And then one of you guys, I forgot who it was, I think you mentioned you used it or found it interesting, because I was going to scrap it and throw it away. And I think one of you guys, it might have been Rain, I don't know, but one of you guys was like, hey, like, did you try this tool? And I'm like, the tool sucks. And like, just saying Akil stuff. And I went back and tried it out some. And I fell in love with it because it's not giving me volume bar by bar. It's giving me, and I guess we would label it as horizontal volume. It's giving me volume price by price, which falls directly in line with my overall philosophy on trading, right? What do I say is the backbone of my trading? Support and resistance. Support and resistance is nothing more than interest in the market. Interest in the market is nothing more than volume. So what it does is it adds confirmation. It tells me I'm right when I already know I'm right, which is good. We all love a compliment, right? It tells me I'm right when I'm already right, which is cool. Builds confidence that way. But as you mentioned earlier, it allows me to see small clues that I perhaps overlooked, or small clues in kind of confusing areas that I may have not been able to anticipate before. So think about it as it allows me to be more accurate with my shooting, right? Well, before, maybe I have a bigger target and I'm like, okay, this is a dartboard. I can hit a certain area on a dartboard, but maybe not the bullseye or the inner circle. Now it allows me to get a clearer view of like that inner circle and just become a little bit more accurate. And that's very helpful in trading. Because if you've ever missed targets by a few pips, it sucks. So if I can pinpoint my targets a little bit earlier and get out a little bit safer, that's the difference between a winning trade and a break-even trade. Sometimes it's a difference between getting stopped out by a pip and having my stops in a little bit of a safer position where I get saved. And that may only affect a handful of trades throughout the year. But you guys know the power of small changes. You guys know the power of 1 degree shift, of 1% difference a day. That can make a massive difference in your trading. So it's not a super golden get rich quick tool. It's just something that makes me a little bit better. And that's my goal, is to find small things as I continue to evolve as a trader, small things that push me in the right direction of just getting a little bit better. So that's my story on volume. Again, a growth mindset is key. We can never be afraid to learn, whether you are a new trader, whether you are an experienced trader. It's important that we're always progressing and trying to improve ourselves. If you want to improve your trading, a really easy way to do so is get involved with coaching, get involved with mentorship, get involved with a community of like-minded individuals. And guess what? And we happen to have all of those available at www.tier1trading.com. Again, this isn't a sales pitch to say this is where you need to be, you have to do that or you're going to fail. But if you're someone that's stuck, if you're someone that is lonely, if you're someone that wants to improve and just hasn't found a way to do so yet, give it a try. Take up that risk-free 14-day trial membership. See if what we're doing on the platform is helpful. If it is, stick with us. If it's not, then you leave with no risk at all. All right? www.tier1trading.com. I'll see you guys over there.